During your tenure at Barclays, you tripled their revenue and it was one of the most successful unit of Barclays. What was the leadership quality that allowed you to grow Barclays unit? Most of the multinational bank, you say Standard Chartered, Citi Bank, HSBC, they are not able to have a strong foothold in India. What do you think is the challenge that they face?
First and foremost is maybe there is a misconception about the role of foreign banks.
In India, the interest rate is higher than the developed economy that you say Japan, UK, USA. Why do you think there is a big difference between the interest rate of India?
In economics, there is a concept called the impossible trinity. Like you cannot simultaneously control all the three. What are those three?
So the government had that policy to bring back the black money. Can you shed some light on the perception of what is a Swiss bank, or what does transferring money to a offshore account mean and how does this happen?
In money laundering, there are three stages of money laundering, right?
Which fintech company do you think it's breaking the ground in terms of revolutionizing the entire finance? Do you see India becoming the leader in this fintech space? As a CEO of such a multinational company, what will be their salary and what perks does the bank offer? You have entire life journey you have been with bank industry. You started in 93, were associated with Citibank, then you were associated with Standard Chartered Bank for 11 years. Then 2017, you became the CEO of Barclays and you were till 2023. And during your tenure at Barclays, you were associated with corporate banking and also investment banking. And at the same time, the Indian unit that you were heading were that tripled their revenue over the tenure, and it was one of the most successful unit of Barclays. So during your tenure, sir, what was your vision when you were at Barclays, and what was the leadership quality that helped you to achieve such a big milestone at Barclays?
Thank you, Visefa. First and foremost, let me start from there. Thank you for inviting me to your podcast. I also need to congratulate you because it isn't often that people tend to develop their own passion while doing their job. So one of those rare occasions where I find somebody like you pursuing both.
Thank you so much.
Now, to your question about my career, what kind of qualities like me here. Now, I must be honest and admit to you that this isn't a case of having carefully orchestrated a career.
Okay.
Things happened, fell in place as I moved from one location to another.
Okay.
So if I were to just reflect back and think about, shall I say, some seminal moments. So to it, many of us who left India before the private bank licenses were given out,
Okay.
always wanted an opportunity to come back and build a Main Street bank in your own backyard. And that was the opportunity with Barclays to build a retail and a commercial bank in India. So I jumped at the offer, came back. So I started out as the COO, Chief Operating Officer,
Okay.
in retail and the commercial bank. And you mentioned about qualities, yeah, but I just wanted to set this up in context. So typically when you want to start a venture, you're looking for capital, you're looking for talent,
Okay.
you want a fantastic business model. I think we had all of that.
Okay.
Yet, I think the business that we launched, the retail and the commercial business for Barclays, wasn't a big success.
Okay.
So I have spent a lot of time trying to think why would that be the case when you had capital, when you had talent, business model, etc. And one of the things that I realized, and this is connecting the dots back, was
Yes.
to get timing right. Yeah.
Okay.
Because I think that was the time when we launched a business in 2007,
Okay.
when the financial
Crisis.
how it
Yes.
started. The worldview then was India was insulated from the global crisis, and therefore it shouldn't matter much because it was a domestic consumption-led economy. But that wasn't the case. India had a lagged effect, and therefore by the time the business matured, we were bleeding. Our customer base showed signs of delinquency, and soon enough, Barclays decided that they will exit. So my journey of leadership in Barclays seemed to be a case of being at the right time
Okay.
and doing the right kind of things. So I was first, so when the decision was taken to disinvest our retail and commercial portfolio, I was given responsibility for doing that. We happened to execute that well, and therefore I had an opportunity to become the chief operating officer for the investment bank. That was a 3-year road, after which I got appointed as the CEO. So rather than leadership qualities, I think it was a couple of things. I think resilient, being around when
Yes.
things weren't going as well as one would have expected it to. People left the franchise to join better opportunities elsewhere. But I wanted to stick in and turn things around because it was almost like a personal mission.
Okay.
How could you get it around?
How-
So that was one thing that I could reflect back and say that maybe, resilience is important. The second one is being authentic to yourself. It is clearly the case that large organizations can't be run by one single person.
Okay.
I think that's the myth of this alpha personality leading large organizations. Far from it, I think leadership is a responsibility, and we had good set of people around to be able to help. So, being authentic, knowing your weakness, I think that would be another thing that I could fight them. But the vision was always to help Barclays achieve its full potential in a market that was growing. That was always the vision. And I think as I left, so when I joined Barclays, we had an investment bank, doing reasonably okay. But when I was leaving, we had $500 million in revenue.
Okay.
So certainly the case that, if not fully, we were able to unlock some bit of potential for the brand in this market. And I feel so proud about it.
But as you said, you didn't disinvested. Barclays decided to disinvest because it was not working well. And that is a similar case with most of the multinational bank. You say Standard Chartered, Citibank, HSBC. They are not able to have a strong foothold in India. And India being such a huge opportunity, also at the same time not having those strong foothold, what do you think that is the challenge that they face?
Yeah, yeah. I think, say, for first and foremost is maybe there is a misconception about the role of foreign banks in any location. Yeah. So specifically, we're talking about in India, it's not as if that they're not doing well. So, for example, Citi, that's a 125-year-old franchise in the country. HSBC, again, 100 plus years. But I think what I think you're telling is true, which is if you look at the size of the foreign bank assets,
Okay.
balance sheet compared to the size of assets that a private bank or a public sector bank has in India, that's disproportionate. Yeah. So to that extent, I agree that, none of the foreign banks have reached scale. And that I think is par for the course, primarily because I think when you think about a portfolio,
Okay.
a large MNC bank has got lots of portfolios, right? They are present in every market. And there is an opportunity cost associated with capital allocation in a particular market because that same dollar could have a substantial return elsewhere.
Okay.
So then it becomes a portfolio approach as to how do you optimize your footprint as opposed to going all in a particular market.
Okay.
Having said that, I think what has happened largely is that on the retail side, where you need to have, shall I say, good liability base to be able to then use that as an advantage for you to lend. I think, what you're saying is true. Not many foreign banks seem to have a large retail presence.
Okay.
But if you think about institutional business, especially of the cross-border nature, then, foreign banks are, that's their forte, right? How do you help conglomerates who got an aspiration to tap the, deep Western capital market? Or how do you help somebody who is aspiring to be part of a global value chain, say, for example, exporting some goods, or you help them, in trade finance, etc. That is traditionally the foreign bank's forte. And that they have done reasonably well. So to summarize, I think a typical foreign bank approach is to optimize their portfolio. Therefore, you don't see too many, shall I say, all in India kind of approach.
Okay.
That isn't to say that, if you look at HSBC, Standard Chartered, Citi, they have, 100 years plus of existence here, and they are doing large portfolios here.
Okay.
So, yeah.
So these banks, their primary goal is not to cater middle class. Their goal is to cater either their offshore branches or offshore offices, or either the premium segment of India. Is that understanding correct?
I think the segmentation is perhaps where I would have a little bit of, shall I say, pushback. I wouldn't classify this as, the foreign banks are only focused at the top end of, as they say, India A, India B, or India versus Bharat, and they're focused on India. I think that comes from historically, if you were to think about it, I think it required, in order to be able to tap Bharat or mainland India,
Okay.
it required you to have distribution, right? Branches. And those were, not easily available on tap.
Okay.
It required, there was a licensing regime. And if you think about that from that backdrop, then, now maybe branches distribution can be done online, etc. But you've lost a lot of position to some of these locally established franchises. So it's hard to win
Okay.
win away embedded relationships. So I feel that if you think about last mile delivery, you wouldn't see too many foreign banks there.
Okay.
And that requires, shall I say, a competency which I think the foreign banks perhaps, don't spend too much time investing in creating those capabilities.
Okay.
They operate in, like I said, large corporates, cross-border trade. That is their sweet spot. Primarily because their, shall I say, USP comes from able to raise foreign currency cheaply in their home market. Just as, let's say, a State Bank of India raises Indian rupees
Okay.
domestically at a cheaper cost, and therefore the spreads are much, the economics work better. Likewise, for foreign banks, the forte is foreign currency transactions.
Okay. So, sir, in India, borrowing always considered a double-edged sword, and in India, the interest rate is higher than the developed economy that you say Japan, UK, USA. In Japan, you see the interest rate being between 1 to 2%, UK between 4 to 5%, and USA is around 5 to 7%. But in India, if you take a housing loan, the interest rate comes around 8 to 10%, and if you go for an education loan, the interest rate comes around 10 to 12% or even more. So that impacts the consumer behavior, also increases the financial stability, risk of financial stability for an individual. So why do you think there is a big difference between the interest rate of India as compared to other developed economies, and how do you see India bridging that gap between having that high interest rate and then making it financially feasible for the Indians if they reduce the interest rate so that they can borrow more and then grow themselves.
Yeah. So, to say, for first and foremost, I have to, acknowledge that the cost of borrowing in India is higher compared to some of the developed economies. Yeah. So that's a fact.
Yes.
Now, one of the things that needs to be said is that the interest rates are hardly influenced by one single entity or institution.
Okay.
The interest rates are largely driven by macroeconomic factors.
Okay.
The central bank, through its monetary policy, is singularly responsible for establishing the average interest rate, or, as they say, the policy rate. And that policy rate is the benchmark on which any other transactions takes place. Yeah? And in order to think about that general level of interest rate in the economy, one has to think about other factors. For example, where does the economy have capital controls or not? The second thing is, what level of influence does the central bank have on managing the currency?
Okay.
So in economics, there is a concept called the impossible trinity. that you cannot simultaneously control all the three. What are those three? One, have an independent monetary policy.
Okay.
Two, have control of capital coming in and going out. That's the second thing. And the third level, and the general level of interest rate in an economy is driven by the central bank, and they influence that through their monetary policy. So it isn't the case that one entity or an institution can influence the cost of borrowing. Yeah.
Okay.
There are some factors that are to do with, typically the way cost of borrowing happens is one, there is a, shall I say, a risk-free rate, on top of which you add your credit risk, then you add your tenor risk, yeah, which is if it's a short-term loan, and there is some degree of liquidity that's possible in short term. If it's a longer term loan, so it's called the term free.
Okay.
So this is the three additions that then becomes a cost of borrowing for a particular individual or a entity.
Okay.
So the first part, which is what's the average rate or the interest rate in the economy, is largely influenced by the central bank through their monetary policy.
Okay.
And one of the things, because we are talking about the general level of interest rate in the economy, it is important to think about a concept called the impossible trinity.
Okay.
That you cannot at the same time influence all the three. And those three are, one is, amount of capital coming in and coming out.
Okay.
And if you want to fix a particular peg of your currency rate vis-a-vis, let's say, another currency. And then the third pace is independent monetary policy.
Okay.
You can only do two at a time. And India have chosen to have capital control so that the other two is possible.
Okay.
That they can influence, the amount of capital coming in and out, and to fix a particular exchange rate.
Okay.
But there also, again, RBI from time to time intervenes in the foreign exchange market to be able to have a broad band in which the currency flows. Yeah.
Yeah.
So, long story short, the interest rate cost of borrowing in India is high, but that is true for most of the emerging economies. That has to do with the amount of money supply in the economy.
Okay.
That is driven largely by a monetary policy by the central bank.
Okay. So also this brings one more question. So interest rate, as you said, depends on the uh, flow of capital and also the expenditure as well. If you see the government over past few years, they have increased the expenditure, but the revenue has not been increased to the same proportion. But now you see that government also increasing the expenditure by giving out freebies to people in India. You have seen states like Andhra Pradesh, Maharashtra providing freebies to gain a populist opinion for themselves. So I just wanted to understand from your perspective that how freebies impact the financial stability of a country, and also how does it change the consumer behavior or the consumer perception when if they are receiving those freebie towards the politicians or the people who are in government.
Yeah. So who say for first is that, this thing about expenditure and revenue is something which is not a monetary policy item. It's called a fiscal policy item. So and that fiscal policy, one of the tools that the central bank has is, or the government has, is a level of taxes in the economy. So GST rates, income tax, etc. That defines the revenue for the government. And then the expenditure is, as you say, anything that is being spent paying for government employees or any other thing that they will spend money more.
Okay.
So what I think you're raising is the fact that by virtue of Freebies, the fiscal deficit, which is that these are expenditures that are not matched by revenues, happens.
Okay.
And there is, of course, a percentage, as a percentage of GDP, there are, shall I say, targets that the government sets for itself. as they think about the wider economy. So in a specific case of waivers of loans, etc., I think there is a concept that is called moral hazard. That's what kicks in, which is, let's say, for example, you borrow from me, and you expect that because you and I are friends, that I would never ask the money back. Then it could potentially possible that you take risks much more than possibly what is warranted if you had to return it. Okay. Or the other way around is that you're not interested in ensuring that the economics are sound because you know that I will never ask for the money back. So this loan waiver typically comes in because it impacts the behavior of the borrower. Okay. Through a phenomena called the moral hazard. Okay. Hence, these loan waivers, typically, if you speak to any economist, they would think that this isn't something that we should be promote. Okay. But of course, a government has its own pressures and urgencies as to why they would do it. The role of a government is to ensure that in a capitalist economy, the income distribution is across segments, right? Okay. So it might be possible that the entire concept of trying to do loans at a cheaper rate or to request banks to be priority sector lending. All of this happens because those are segments where maybe economically it is not sound, but you can't therefore not do it. So that's the role that the government plays. And again, that's a tight rope walk between ensuring that the policy objectives are met at the same time it does not become profligate.
So yeah, so just highlight on this point, I was reading a report where it said that Tamil Nadu government distributed free televisions across the state, which apparently led people to consume more content. They got more informed, hence they started educating their children and educating their people around them, which led to higher enrollment in colleges. So sometimes I think you don't know what works, but I think it's most of a populist opinion and providing freebies and loan waivers. So that is one point that I just wanted to make. So moving on, sir, one question that I had in my mind, and that's very important also. So going back in 2014 general elections, the Indian government at that point was promoting a factor called bringing back black money, and that was that generally people in India think that black money is offshored. They are transferred through various medium, through banks in Switzerland, Singapore, Panama Islands, and all the tax haven that are there. So uh, the government had that policy to bring back the black money. So given this context, my question is that can you shed some light on the perception of what is a Swiss bank, or what does transferring money to a offshore account mean, and how does this happen?
Yeah. I think, Josefa, you raised a good question or an interesting question around this association between black money and offshore account or offshore banking. It's unfortunate. Think about yourself as a world traveler or somebody, who intends to settle, let's say, outside your home country, or somebody who's currently, shall I say, on assignment. Typically, for example, multinational companies have something called an international assignment, where you go and work in a different market from your home market, right? So there are legitimate reasons as to why you would want to hold an account outside the country that you're resident in. Simply think about investments. One way of thinking about it is you just invest domestically. But in order to be able to diversify your portfolio, it could be possible that you want to invest in assets outside the area as well. So this association of black money and offshore account happens unfortunately because many people assume that as long as the money is outside India, it is not taxable. Okay. And that's a wrong assumption. So in India, if you're not aware, every income that is earned for a resident in India needs to be offered for tax.
Okay.
And the concept that you were referring, where they were allowing a window, and nesty scheme as it was called, was one time if you hadn't offered those income or amounts that you have outside for taxes, during this window you could offer them for tax and make that, so that's that association with black money.
Okay.
Converting to white is just basically something that people may not have declared earlier. Now they have this window to be able to do it. But I think now with the liberalized remittance scheme, it is possible for every individual up to $240,000 to be able to send money outside for investments, holding assets, educating their child, etc. Okay. And some of these jurisdictions, for example, typically, let's say the Isle of Man, Jersey Islands, Guernsey, etc., these are big offshore centers. And where, by virtue of very tax friendly jurisdiction, it is possible that they allow the investor a higher share of, profits because it's not taxable there, right? Let's say, for example, Dubai. And that is how your return could perhaps look different and appealing than if you were to do it domestically. So there are economic reasons why money seeks investment abroad. And to facilitate that, India does not allow a free, you can't move money in and out freely. So there is a restriction, and that restriction today is $240,000 per individual per financial year. Okay, so this association of black money and offshore banking is unfortunate because people felt that that money need not be accounted for.
So, coming to this, like just continuing this point, people have, created shell companies, or they have created their HOs in places like this, Singapore or Switzerland, and which allows them to, not a round trip, yeah, not pay a tax on it, and they can, the Indian laws or the treaties, they can find loopholes and they can avoid paying taxes. Do you think, as a country, if India has identified these loopholes, will it be possible to bring back those money back, or the regulations in this country are so strict, or they won't allow, or they won't provide this access to such information and tracking of such movement of money?
I think, Jose, for one of the things maybe I can touch on is why in some of these jurisdictions have secrecy, they've adopted secrecy regimes. So, for example, Swiss. But then after 9/11, I think two seminal legislations were put in place, right, globally. One, I don't know whether there's something called FACTA, which is Foreign Account of Compliance Tax Regime. And there is another one called Common Reporting Standards. So all of this entails all financial institutions to declare, whether that individual is a resident, non-resident. Specifically, if it's you are a US person, then there is a responsibility that you need to, create a summary of your portfolio and then share that with the US Treasury. So it's become very hard now for you to do it. One of the things that you were referencing was these shell companies, right? I think the objective there perhaps could be that every time you establish, so for example, in money laundering, there are three stages of money laundering, right? First you place it, then you layer it, and then you integrate it. That layering is what you try and move that money as far as possible from the source through different jurisdictions, because each jurisdiction you have to pierce what is called the corporate wheel, because customer information, why would they give you?
Okay.
For example, if I have got some account in the UK, and if the Indian government wants information of that account, it has to go through a process, right? That process creates friction. Assuming that I take that money from London to Singapore to Panama, as many number of jurisdictions that you introduce, it becomes that much more harder. So that's the way that typically in the past this was being done. But now, the authorities, the enforcement agencies have also become smarter. There are various now rules and regulations that one needs to follow. It's incumbent both on somebody who's putting in the money as well as the institution holding the money that they have a reporting obligation.
Okay. So now, sir, the banking industry is now being influenced by a lot of technological innovation, shift in consumer behavior, and also there's incorporation of AI as well in the banking products. So, what do you see? How do you see the banking sector in general evolving and going forward from here?
Yeah, that's a very interesting question, Jose. The future of finance, so to speak, right? I think the first and foremost thing that I would like to think about is when I entered the industry. At that point in time, I entered on the retail side, right? I was in the cards business. At that point in time, one of the biggest things inside the retail bank was how might we be able to personalize or customize our offering, just like the way the corporate bank were doing, because institutional banks were able to, they had a specific industry client. They literally knew what was happening in the industry sector. So they were always able to be, a go-to. Whereas on the retail side, given that you've got a large client base and each one with its own interest, shall I say, behavioral leanings, etc., it was hard to create something that worked for everybody. At the time when I was leaving the industry, which is now, I think it is now possible for you to personalize at scale, right? Okay. And that has happened thanks to a lot of data, a lot of analytics, that it is possible for you to offer what an individual wants basis, let's say, what you have been searching for or what transaction you conducted in the recent past to be able to predict what your next transaction could look like. And if there is a way by which we can offer a product or a solution around that, then it becomes that much more relevant, right? So personalization at scale, I feel that's one mega trend.
Okay.
The second piece in terms of future of finance that I want to talk about is something around open banking, open finance, open economy. So this is the idea that earlier you had, shall I say, a central counterparty, let's say, for example, banks, that had access to the time data. And therefore, it was just the banks who were able to, if at all possible, try and make some, relevant solutions or products, services on offer. Now, with increasing regulation, it is possible that there could be, very agile fintechs who could use the same data to be able to create more relevant, shall I say, products and services. So the same personalization at scale is happening because data that was held centrally by, limited counterparties now is accessible to
Many companies.
so I think that again, it's the same theme under personalization, but the journey that has been happening is in India, it was the account aggregator framework. Now I think there is increasingly talk that just like UPI, you could do a credit on tap, for very similar to what they've done payments on tap, like that credit on tap. That will, I think it's like a holy create Ohuye reach that. So that's very thoracic, very interesting. That's the second approach. The third important theme I feel in future of finance is this thing around the climate finance or transition finance. As the impact of industrialization on environment is something that is now, translating into a big risk. And in order for corporations or customers and clients of any size, shape, geography, it's important that they build mechanisms to ensure that they are emitting less carbon or any emissions that influence the environment, right? That requires investment in technology, investment in changing plant and machinery, etc. So the size of finance that is required to help clients transition to what is called net zero operation is huge. For India itself, it is expected that up until 2030, India would need roughly about 150, 160 billion yeah, dollars. So that's a significant amount of money. So I think these are three broad themes when I think about future of finance. Yeah. So first one is personalization at scale using data and analytics. Now, the second one is open banking or the concept of embedded finance. And the third one is sustainable finance, the concept of how do we use uh, credit in order to help clients transition to net zero operations.
Okay.
Now, you talked about AI. Now, that's a common underlying theme in all the three areas that we spoke about, right? Technology. When I entered the industry, I remember we used to have technology being deemed as the back office.
Okay.
Now it is the business, right? And therefore, I think not just AI, but use of technology, whether it is cloud, whether it is data, whether it is use of machine learning, etc. These are new forms of technology. I think that is a secular trend that will continue to impact the finance in a deep way. Specifically on AI, some of the things that we have seen happen is two areas where it is commonly deployed. One is predicting, so propensity to buy, a propensity to borrow. Can I predict whether this is a good credit or bad credit? That's the typical use case for machine learning, AI tools, and so on. Okay. The second use case for AI that I've commonly found is in terms of risk management.
Okay.
Again, predicting, but can you pick? It is good in picking things that are out of pattern. Fraud. What is fraud? Fraud is things that do not follow a pattern, right? So we've seen a lot of use of machine learning AI models in detecting fraud or in largely fraud P2O. So, certainly technology and all of its, whether it is Gen AI, machine learning, modeling, using these tools, I think that is clearly a trend now.
So right now in the current situation, which fintech company do you think is doing? It's breaking the ground in terms of uh, revolutionizing the entire finance, or bringing in innovation into the industry. Which one of the fintech companies do you think is doing a good job?
I think it's hard to pick one, right? There are so many success stories. Fabulous we have seen. In fact, India is the third largest fintech ecosystem in the world. Yeah. So, particularly if you were pushing me for a specific response to this question, I think one of the companies that I really role model, uh, one of the companies that I really like their evolution has been UB, if you've heard of this. They started off as a credible. This is a company that just in over 4 years is, of course, a unicorn. They've now, trying to build out a large franchise based on simple lending, creating technology that banks and NBFCs can use to be able to partner, co-lend, as the term being used. So UB is one company to watch for, and somebody, Gaurav Kumar, who's the promoter, is somebody that I've got a lot of time and respect for what he has built, very, very organic.
Okay. And as you said, India is the third fintech hub. Do you see India becoming the leader in this fintech space?
And the aspiration is there, Josepa. Whether it will translate requires for us to wait and watch. I don't have a crystal ball. But I think there are lots. For example, in payments, we have leapfrog. I mean, it is clearly the case that faster payments, etc., the UPI piece certainly is something that we have used models, the same model outside India. Then the other one is thinking about digital as a public infrastructure.
Okay.
I think that also is something that I feel India has contributed quite a lot. Typically, the way we've seen it evolve is private players come in, use those technology to be able to capture a significant share of value. But the government thinking about that as a public infrastructure that they have to put in place to enable economy to grow. That's a new thing. So, I mean, India has got all the trappings, talent. There is enough and more to say about tariff. So, India has the trappings. I think, as is the case, it's left for people to seize the opportunity and put us on the map.
That's a great insight. Now, as you see fintech industry coming in, and there are a lot of young people also who are attracted towards it, and in the current situation more and more people want to know how they can be financially independent. As a banker yourself, what do you suggest a person should do in choosing the right banking product, and also at the same time avoiding common mistake that they make financially in their financial planning, or in selecting loans or any other financial instrument?
Yeah. So it's a fascinating question, Josepa. I was recently in one of the things that I love doing is teaching. So I go to various universities and try and engage with the MBA students. So I was recently in one university and I was asking the question, how many of you have got a mutual fund investment or have a bank account? You would be surprised that there was a very, very small population who are aware and exposed. So that set me thinking. So I think, one of the questions that you were asking about, will India really be the number one in the fintech side? I think there is a financial literacy gap, and that also needs to be augmented as we think about deepening the financialization of the economy. That's one generic statement that I would say. And as is the case, one of the most simple aspects of finance or investing is the power of compounding. So, many people that I talk to feel that, hey, I'm not very wealthy, I don't have too much of money left for me to save. But, one of the things that I constantly encourage them is, no amount is too small. And earlier that you do it, the more you allow the power of compounding to take a back. Yeah. So this classic thing about, if you do 0.99 raised to the power of 365 vis-a-vis 1.01 raised to the power of 365, you get vastly different results, right? So like that, start small, but as long as you can continue to do it well, I think that is possibly the gain. Yeah. Start early and do that as much as you can. The second, I also feel the other end of the spectrum happens, which is people feel that they've got an extraordinary ability to pick stars. It might be the case that there's some talent who can do that. But by and large, it's hard to imagine that one can um, beat the market with so many sophistication algo trading, people who have spent a lifetime in that industry. So, recently also it was said, right, in the F&O segment, which is the, derivative segment, there seems to be a lot of retail money going in. And on an average, everybody was losing money. But still, you borrowed and you kept getting into the market hoping that it would down. I think that kind of, shall I say, optimism about superior stock selection or superior investment skills, I think generally ends up in disaster. So I would encourage that people, at least in the starting phase until they build momentum or a large section of their portfolio, to go with a professional money manager. So these are two tips. Yeah, start early, start small. Nothing. So start early. Nothing is too small. And the second one is, superior stock selection. Isn't that?
So, coming to a personal question, what is your investment philosophy?
Yeah. So I use a money manager.
Okay.
I don't think I've got the skill set to be able to do this myself. So I've engaged a professional manager to manage my investment.
Okay.
Yeah.
You being the CEO, COO in Barclays, as a professional, how did you manage this high pressure role with your personal life and your work life balance? What was your work life balance during this stint at Barclays?
Yeah, I think this is a tough one to say. I think many people talk about work-life balance, right? I always think about this as work-life integration. It's hard to, I would imagine, balance this, as in there will be points in time where something takes priority. There are moments in time where possibly you need to be available at home. So in my mind, as long as you feel you're prioritizing right, because one of the things that happens, typically this question could also come where we are unable to clearly identify what's important and urgent, reason,
Okay.
not so. So I typically my counsel to somebody who talks about work-life balance, I always tell them, see where you're spending time and energy on, and see whether those are the things that you would ideally like to spend time and energy on. And it isn't as if that's like a magic and suddenly balance happens. Go to actively work at it. And one of the things that I could say is that as you move up in the hierarchy, I feel it becomes easier because you are able to then either get the support that you require or the maturity to be able to think about this, like I said, as integration. You got to give up something to be able to pursue something. That without a doubt, that is there. So where I stand at the discussion about can I have it all, and at the opposite end of that gap, I think at one point in time, it's possible to have one thing.
Okay.
So that's where I fall in that debate.
People, they generally would like to know, as a CEO or as someone who is in the leadership of such a multinational company, what will be their salary and what perks does the bank offer? You can tell me a range, that's fine. But yeah.
So one thing I can tell you, it isn't as high as one would imagine. Yeah. Hope that answers the question.
So, since you just mentioned PSU, I had seen an interview of Mr. Ravneesh Kumar, ex-chairman of SBI. He had said that, and it's in public domain right now. So, and the salary of a chairman is around 35 lakhs, and the perks that they get is amazing house and amazing cars, everything they get.
You answered it, Hussein.
Yeah.
So that's
But the only drawback is that the money that they make till the chairman is it's good, but then they don't make enough money that they can, after their retirement or after moving from that role, they can sustain the same level of lifestyle post their retirement. So that was an interview that I saw of his.
the thing that I feel, Visepa, is that it's incredibly hard in a public sector bank to rise up to that level. And I would think that the ability for them to do something meaningful beyond their term is much higher compared to maybe somebody coming in that position from a private sector or a foreign MNC.
Okay.
Because I think that understanding, and you don't have to look too far. Look at the case of the current CEO of Salesforce. She was the earlier chairman for SBI.
Okay.
She's doing an incredible job at Salesforce. So I think that should be true.
Okay. Now just coming to the leaders, any one person. So, as youngsters, we there are few founders that that we look up to, maybe Ashnir Grover, Vijay Shekhar Sharma. But lately, they have had their purple patches, and they have have gone down in terms of management. But as a leader yourself, who is one of the founders that has impressed you the most?
Yeah, so Kisepa, it doesn't take too much to inspire or move me. And, maybe we will talk about it, but I'm just in a journey of trying to set up something on my own. So I know every entrepreneurial, story is inspiring. It has come battling heavy odds. So I've got a lot of time and respect for every founder, and like I said, it doesn't take too much to inspire me at all.
That that's pretty sweet of you, sir. Just in concluding our discussion, now since you have moved on from Barclays Bank, what is the next chapter in your life that you are pursuing right now?
Yeah, Josepa, I think I spent a lot of time thinking about this. And I think one of the things where I got to was uh, trying to build a portfolio career. Yeah, doing a bunch of things that interest you. So there are some themes that resonates most with me. For example, AI. I like to be associated with that. Education. I feel that there's something around trying to inspire kids at the right age that is going to be very important. The topic of sustainability that we spoke about. Yeah, so there are various things, healthcare, all that. I want to be associated with that. Currently, what I'm endeavoring to do is to, I picked one of those things, which is the theme of sustainability, trying to understand how, by use of credit and technology, we can help small businesses transition into green. So that's where currently I'm spending time and energy on, and hopefully, pretty quickly we'll have some news about, my founding that MDS.
Oh, that's amazing.
Thank you.
And I wish you all the best for that. And with that, we'll just conclude this podcast. And thank you for being such a lovely person and sharing your insights with us and with the larger audience.
Thank you so much, Josepa. It was a pleasure speaking to you. And like I said, congratulations to you for keeping this going. Thank you
Thanks so much.